Good morning, everyone, and welcome to the Quantum Leap Morning Leap session for Tuesday, May the 3rd, 2016. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning we come together and take a look at the market, macro to micro. We take a look at the structure of the market, and then we drill down and determine where our trade levels are going to be, what our targets are, and what our main hypotheses are. This is a subscription room, so if you want to come in and check us out, I'll put up my contact information in just 1 second. Before I do, please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so if you want to get a hold of me, just send me an email at quantumleapfutures@gmail.com or Skype request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. There's over 300 videos, 300 days of these videos that we do live each morning. You can check out our past performance. And if you like what we do, follow me on Twitter. There's no website, there's no blog. This is not a commercial venture. Okay, so yesterday our main hypothesis was to come down into the 61.50 to the 59.50 area, find responsive buyers, and then move up into the wicks of Thursday and Friday and get stuck in the wicks and chop around and chop between the 78 and the 69 level. I mean, the hypothesis was perfect. Just the market was just, it was, if you missed the trade, there was really nothing to do most of the day because it was too choppy. And I only got 4 trades on overall. We finally got the short that I was looking for. I wanted the short in the 75 to 77 and a quarter area. Took my first short at 72, and then I just took it down because it looked like it had some more upside target. And then I got in at 75, 75, and 77, and finally took it down for 74 even, I believe. Well, what did I end up with yesterday? Not great. I think it was like just over 10 points, or just under 10 points. Why don't just go up on my screen? Yeah, just over 10 points net. So it wasn't a great day, but it was a tough day. I didn't trade most of the day, and I wasn't feeling great. We did create a double distribution day, and we had a double distribution overnight. We'll talk about that in just a couple of minutes. Taking a look at the news, we don't have a lot of news today. We do have IBD tip economic optimism. We've got Mester speaking at 10:30, and then we've got vehicle sales all day. But other than that, that's the only information. We are in earnings season, so just keep that in mind. I'm not sure if we had any big names reporting tonight or not. What I like to do each day is start my day with a simple candlestick chart. I use a 9 EMA and a 20 SMA, and I'm basically looking for trends, slope and separation, and where the trends are being violated. I start with the monthly and work my way down. You can see that we had a beautiful trend, then we're in this consolidation. We violated the trend at the end of the year and at the beginning of this year, but so far we've taken it back, and we're holding above the 9 and the 20 on the monthly. So possible continuation on the monthly. Our month open is 2060.75. We're trading 2062.50, so we're just above that. The weekly one time framing has now been challenged by last week, but the trend itself is still intact until we get back down into that 2040 area, the 2040 50 microcomposite VPOC is something that I'd be looking for. There's a naked cross down here at 1983 and a quarter, but it's on a weekly time frame, so you have to put it into context. On the daily, We basically are consolidating sideways right now. We're chopping around. The trend has been violated, so there's a possible rollover here on the daily. But right now I'm considering it more consolidation than a complete violation of the trend. On the intraday, a little bit different story. We've kind of rolled over. We had a pretty strong trend on Friday and Monday, and yesterday they tried to take it back, and then overnight they failed and followed over, and we're starting to get a continuation pattern down on the 4-hour. On the 1-hour, you can see we do have slope and separation. We do have a bit of a technical gap. A gap close will take us up into the 64, 65. This is going to be a key level for us today. There is a naked cross up here at the 2070, 75 area, but so far the coming into the market, the shorter time frames are showing downward trend. Here's the 30-minute. We've closed the technical gap. We're trying to get above the 9 right now, but the trend is to the downside. On the 15-minute, the strong trend down. Now we've come up and we've closed above the, we're not closing, we're trying to close above the 9 and the 20. So we've got some consolidation, possibly a trend change on the 15-minute. And then on the 5-minute, you can see we are in consolidation and we're starting to get some slope and separation. But it's going to be an interesting morning, to say the least. Okay, so let's take a look at the big picture structure. Again, just putting it into context. Last quarter of 2015, we were in this balance area. Pretty nice Gaussian distribution here with the microcomposite VPOC at 6350, and we fell out of that in January, went down and created this balance zone, and then we broke back out, worked our way up, got back inside of the value area low at 2008, and then got above the microcomposite LVN at 2016, and since then we've been working our way up towards the microcomposite VPOC at 6350 and the composite VPOC that goes all the way back to the beginning of 2013 at 6150. We chopped around there. We created a balance zone here around the microcomposite at 2040.50. The last price that we accepted before the breakout was at 2047.75, and then we gapped up. Okay, accepted value higher at 75.75. Got the continuation. Tried to break out of the value area from the last quarter of last year at 2086.50. Broke out, made a new all-time high at 2105.25. Couldn't hold value, and then we come back in. And where did we come back? We came back inside of the microcomposite value area and came down and found buyers at the last accepted price before the breakout. And then we tried to break out again. We broke out again above the 57 value area high, got up into, tried to get inside of the value area that we had just created on the breakout, failed to hold that yesterday, came down, tested this microcomposite VPOC from the Friday, and chopped around. We got stuck in the wicks like we were anticipating. You can see we said my main hypothesis was we'd be stuck in the upper wicks. My secondary hypothesis was we were going to get stuck in the lower wicks. So we've auctioned the wicks to the upside overnight. Okay, inventory is net short, and we've come down and we've tested overnight low is 57.25. We tested this value area high, and so far we found buyers, and we're chopping around long-term price acceptance in around the 61.50. And key levels to watch on the macro right now is this 57. If we get below 57, then I'd be looking for them to come back down towards this 47 and get stuck in this wick today, chop around with a possible dip down to the 40-50 again to test it. If we can hold the 57, or even just dip in and find buyers and pop back out, look for them to come back up into the 61.50, and then 63 and a quarter, is going to be a key level. But really, the key level that I'm looking at today is going to be, between, overnight we had a double distribution with the LVN being at, 66.50. Midpoint was 66.75, and our LVN from the prior day, the RTH session is 69.75. So I'm going to be using this 66, 67, call it 67 to 69.75, 67 to 70, this 3-point range right here as a slush area. If we get above 70, then I'm looking for continuation up towards the HVN in that 74.50, 75 area. But if we can't hold that, then I think we're going to fall back down and come back down towards the 47 and 40-50 area. So taking a look at the overnight, our overnight high is 76 and a quarter. Our overnight low is 57 and a quarter. So based on our 20-day ATR target, our 20-day ATR at 2203, our upside ATR target, daily target, gets shifted up to 79 and a quarter, and off of the overnight high, 2076 and a quarter minus 2203, our downside ATR target goes to 2054 and a quarter. Our weekly high and low, our weekly low is 2055.50. Our weekly ATR is 65.8875. So our upside weekly ATR is still at 21.25, and our downside won't change either. So our upside and downside, or actually let me just check. Our weekly high is 77.50. Yeah, this might change. 65.8875. 2011 shifts up slightly. $20.11.50. Okay, so those are our daily ATR targets. Like I said, we've got a LVN at 66.50. Basically, what I'm going to do is this. I'm going to put it between the 65.50 and the 66.50, and then I'm going to put another trade area here at the 69. Then we've got nothing else we really need from here. Our overnight VPOC is not likely. It could shift slightly, but it's not going to shift very far. 60.50. And then we've got the naked VPOC that we left. We missed it by one tick. I'm expecting this to get taken out today. So I'm going to put, there's really not much I can do in this area. You got, even though you've got your value area at 60, you got your overnight VPOC at 60.50, you've got your micro composite or composite VPOC at 61, you've got 63.50 as a target above. This is a real big cluster, and it's going to be very choppy in this area. Our first real level is going to be just below the 57.25 overnight low here at the 57. So, you know, and you know, our downside daily ATR target, is that right? Sorry, what's our overnight high? 2076.25 minus 2208. 2054. So I mean, we're almost down to our our daily downside ATR target. Below the 57, I don't need this now. If we can expand this out, it's going to get real choppy in this area just because there's so much going on right here. You got the 56.50. So I'm going to move the 57 down to 56.50. to the CLVN, and then below that you've got 55.50, but really not actionable. The next big one's going to be for me 51.25 target, and then 49, and then our numbers get more acceptable. This is going to be shifted to 48.50. And 45.75, 43.75, and then the major target below at 40.50. And then below that we've got the year open at 37.75, and then 32.75. And that's our downside numbers. To the upside, 63.50. The 66, you've got the naked VPOC at 66.50. 69.75, then you've got 72.50 value area high. Then the naked close at 74.50. The overnight high at 76. 78.25 range high, and then our daily upside target at 79.25. Our scene of the crime 81.50, and 84.25. The micro composite is 85.75. Micro value area high is 90, and then 94 Bank of Japan scene of the crime 98, and 2100, etc. Okay, so my main hypothesis today, again, chop and lots of it. My primary hypothesis, hypothesis 1, is to have responsive buyers move up somewhere between the 65, 66 area or 69, 75. Find initiative sellers and then move it back down through, take out the naked VPOC and the overnight low, start chopping around in this this lower. Let me just bring this up again. Sorry. Chop around in this lower wick from Friday, okay, and somewhere between the basically chop between 61.50 and the 40-50 if we get a late day probe. But I think it's going to be fairly tight chop. So I'm looking for a move up on the open and a failure somewhere between 65 and 69, and then come back down, chop around in the 61.50 to 59.50, and then start coming back down and chopping between this area of undetermined fair value, 55, 50, 51, and 45, 75, and get stuck in the wick down here today. That's my primary hypothesis. My secondary hypothesis is we chop on the open, come down into the 57 area, find responsive buyers between 57 and the 55.50, and then rotate back up through, come up and test this 69.75 area, chop around here, and then get a late day probe up into, take out the naked close and chop in the upper distribution. So that's hypothesis number 2. Hypothesis number 3 is we chop on the open, we come down, we find responsive buyers, come down, chop around in the wick, then fail and come back down and come right through the 40-50 down into testing the year open at 37.75. So that's hypothesis number 2. And then an alternative is we get responsive buying right off the get-go. We come up into the 69.75, fight the 69.75, and then break higher, get an impulse move up, and break out of yesterday's range and come all the way back up in here into the value area of the microcomposite that we just broke out of, and up into this microcomposite VPOC up here at 85.75. I think it's going to be choppy. There's not a lot of news to drive this market right now. Thursday, just somebody pointed this out to me this morning, Thursday is the 6th anniversary of the flash crash. I don't know if that's going to affect the market or not, but it's something to have in your in the back of your mind, as it might influence people. Anyway, taking a look at gold. Where's gold trading right now? Gold is trading 98.40. I got taken out. All right, so I've been attempting to get back into gold and get in for the run to 1310. That is going to be a focus for me today. I think gold is going to try to break through into the 1300s again today and move us up into that 1309.70 and complete the rule of 10. Currently right now, balance is at 1296.40. We've dipped into the 1300s this morning again, but so far we've fallen back. We're now trading 1297.90. I took 2 swings at the long, got funded both times, and flat with just over 120 bucks in Theo. So I'll take another attempt if we get back above that 1298. Maybe wait for the break of the 1300. I think maybe I was just trying to push it there. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and we'll catch you on the flip side.